Hi guys, you're welcome once again to the Bullish Bear FX Academy. Today in this video, I'll be teaching you how to use the support and resistance to trade gold. Now, you need to understand that you don't just have to put support and resistance anywhere and trade anyhow. You want to always make sure you put your support and resistance well, and you want to always make sure that before you take trades, you have confirmations. So join me on this video as I teach you step by step how to trade gold and trade it profitably. Now, when you come to the market and you put your support and your resistance, when you come into the market and you put your support and resistance, then the next thing you want to do is you want to make sure that everything aligns properly. Now, I know you would say, hey Tim, why not put it here? But one thing you need to understand is you always want to work mainly with what's happening currently. Even though you're using the past to predict the future, you also need to understand that the present has effects even much more than the past. Now, what do I mean? Now, if you observe this was on the 17th of what? On the 17th of April. All right, price had played a whole long roll and has come back to that zone in the future and has even passed it in the future. So you don't have to keep looking at this one when you already have something here. Instead, you could also want to add one more here, but I wouldn't advise putting so much lines all the time, all right, on your charts. You always want to have it clean and nice and simple. Okay, so now you get to observe here we have what we call market structure, and according to market structure, this is a downtrend. We have the low, the lower low, lower high, lower low, lower high. Now this other move here failed to break structure, and instead it went back to the upside. Now when it went to the upside, it broke this structure here, which is this. So I'm just gonna clean this up. Now that it broke this structure, the next thing you want to ask yourself is what is about to happen. So remember, I'm teaching you how to use the support and resistance strategy in trading this gold. So what you want to do is you want to observe, okay, now the market has broken structure. What is expected to happen? Now you get to observe that when price came here in the past, it tried to hold but failed to hold, but instead it broke out and went in deeper and then fell. All right, this was what happened. It fell. So that simply tells us that something is fishy here. So if price ended up falling, it tells us that anytime price comes back here in the future, price will likely hold. And that's exactly what we see here, that price, when it came here, finally it held. Now there's something I call the first hold and the second hold. Here wasn't the first hold, because you define a successful first hold as a market that comes like this. If it came and touched the line and fell successfully, it's a successful hold. And I call it a first hold in the sense that if you look at the past, it hasn't held on that same line before. Probably maybe it has held in a far distant past, but I'm talking about recent times, okay? Recent times. So if there's nothing that has held in that line in most recent times, then we will identify here as our first hold. And as price comes, if price hits that place again and falls, that's another successful second hold. Okay, so you understand what I mean by first hold and second hold. So here successfully was a successful first hold, because here did not actually hold. If you observe, you will see that it tried to hold, the sellers came in, but they failed and the bulls pushed back in. A lot of people's stop losses were hit out of the line on the zone. All right, so that was not a successful hold. So right here we could see a successful hold. Price came in here and held successfully. Now we'll call this place our first successful hold, and then you can just put a little sign there, something to just remind you in case if you see price coming there in the nearest future. So for me, I usually like to put $sign, all right, just as a sign to tell me, hey, there's money here. Get ready if you see price anywhere around here again in the future. All right, so the next thing you want to do is, after making your analysis, you want to start observing price movement. So you must always remember that it's not just about, hey, price is in my zone, let me trade. No, you always want to make sure you have confirmations before you trade, so you can add more confluences. This one I'm teaching you right now is just you using support and resistance. You can always have more confluences why you want to trade. All right, now price has just currently gotten to our zone. Should we trade? No, you can't just go into the market instantly, but we want to observe what is happening so that we don't fall prey like the people who were stopped out on this side. I'm sure some people must have had their target something like this and expecting to trade from here and their stop loss, but they got hit. So you don't want to fall prey to something like that. So for you to be able to avoid such kind of a thing, what you need to do is, now price is at your zone. All right, the next thing you want to do is to confirm, is this a good time to trade? Now obviously we could see that the first time price failed and the second time price held. Remember what I told you, successful hold. So that means there's every tendency that there's going to be a successful second hold. But to be sure, what we're going to do is we observe price again. Now the first candle that touched your zone, you need to allow it to close and let the next candle open, that you might observe what candle is this also. So we're going to open this and down, and now we can see clearly that the next candle that opened showed a huge wall during the market move, and that created a hammer. All right, so the next candle after it, what happened? We could see a bearish momentum, and it's a strong bearish candle. This is a sign that yes, the bears have entered the market. Now is worth risking. So what you want to do is you want to place yourself having the targets from here to where price recently came from. Remember, it's a breakout, so this is actually a neckline of a double bottom that recently happened. So here should be your first target. Maybe you could even target something like here first as your TP1, here TP2, gradually till a very high TP. You never can tell. So we're gonna trade it from here, and let's see how price might go, if in our favor or not in our favor. Okay, so price indeed went in favor and almost heading to our take profit. Let's see if it goes to take profit. Yes, take profit was hit. So what actually happened here? We had a first successful hold telling you that money is here, and then on the second hold we had a not a successful hold. But remember what I told you, you don't just want to trade because price got to your zone. You always want to wait for the first candle that got to your zone, allow it to close. All right, depending on whatever time frame you're observing your market from. If you're observing from the 30-minute time frame or the 1 hour time frame, allow that candle that got to your zone to close and let the next candle open. Sometimes I always like the next candle to also close, because that's going to tell me if indeed the bears have entered the market well or not. Before then, the next candle should tell me, should give me a complete movement. It is just like having 3 different signals. First signal, get my zone. Second signal, close and let me know who was in power within that time frame. And then the next signal, I'm gonna trade with it. I hope you learned something from this video. For the meantime, make sure you stay safe and keep winning.